Okay, let's get right into the stock market technical analysis, guys. I'm starting to feel a little bit better, just starting to turn the corner. I had to rest this afternoon, so a little bit of a late video. Let's get right into it. All right, so today, Microsoft earnings reported, and I want to show you guys a couple things that are playing out really after the earnings. One thing that we do have to take note of is with earnings season, especially as we lead up to the big FANG stocks, the big market moving stocks, the market can get choppy, and a lot of the action sometimes can take place after the market. So it's not always, and that's the other thing, we don't want to just read into the initial move in the afters market. We want to see what the market, how does the market behave after it gets that initial move. So just keep in mind, it's definitely important to understand when those earnings are coming up and how to treat those. Triple Qs. All right, so when I look at the daily chart, still in a downtrend line. We're basically at key resistance in the after hours today. Looking at my trading platform, we popped up to about 290, which is right in here, and that is that trend line right there, marked in red. So that's kind of the secondary downtrend line that I have marked out, coming off of those January 2022 all-time highs in triple Qs. And if you mark that out, that puts us right there. Just overhead is the 200-day simple moving average, which is about 293. And it's just major resistance right overhead. I mean, we don't have much to go to be at that major resistance point. If the market's going to rally a little bit more, now that Microsoft's out of the way, I don't expect we're going to break the 200-day, which is only less than 1% above, but I wouldn't expect we're going to break the 200-day until the other FANG earnings come next week, Apple, Google, things like that. So if we're going to break the 200-day and continue to rally, it would likely not come until after those major earnings, which means we're at big resistance. We have a little bit of time ahead of ourselves before those big earnings come out. So I think we probably get a pullback here, to be honest. If I had to guess, I think we get rejected at resistance. Looking at the hourly chart, you can see a potential uptrend on the hourly. Here's it's only potential because I have one reaction. I do kind of have a double reaction right here, 1, 2. So we could maybe call that 3. But if we get rejected and sell down, that would probably be where the buyers will step in. Because again, I don't see this market going too far away from where it's at right now, either up or down, until after until after Apple reports. So maybe if we get a pullback, we pull it back to there, and that would be about, in the aftermarket, we're trading about 286 right now, 286.80, and that would be maybe 1.5%, 2% pullback down to that trend line. So I think that's probable. The other thing is, in the after hours, because we popped, and it shows on the NASDAQ futures. Let me show you guys. On the NASDAQ futures right here, you can see we popped up. This is right after Microsoft reported, popping up. We made a divergent high on that rally. All right, so there it is. Negative divergence in the hourly chart showing up. So doesn't mean we can't continue to make a new high. Like I said, there's major resistance just overhead. So it doesn't make sense that we're going to go too much further to the upside before we get some sort of a pullback. And it's easier for the market to sell down. There's no big earnings that's going to push the triple Qs back up until Apple reports, basically. So I think we pull back, and with that negative divergence now in place, I think we come down to here. On the NASDAQ futures, you can see support, much more distinctive reactions there on the futures. So some are right in there. Looks like we've got some, we could probably even take this and mark this out, something like that, and maybe dual support down in there. But I think we drift a little lower. Okay, so as such, I did just take a short position in triple Qs in the after hours. Now again, if after hours trading is not your thing, if you're not really into that or you don't have access to it, then just, sit back and hang tough, and we'll wait for a better setup, But for me, it looks like we could potentially have a little pullback, and I'm just looking to game that small little drop and then exit and likely just go flat until we get up to those more major earnings. Okay, S&P 500 again on the daily chart, just basically at perfect trend line resistance. So there it is. We've had multiple reactions at this trend line, and here we are again. Last 2 days basically just been testing that. No change in the technical posture. There's no breakout, and we're just at resistance. So it just tells me, we need to see where this wants to go. If I had to lean one way or the other, I would pick short because we're in a major bear market and we're at major resistance. We also have negative divergence on the hourly chart here. All right, you see the momentum negative divergence there. So yeah, it's a short. I mean, it does tell me it's a perfect short. The only thing that would make me want to give a little pause is the fact that we have those big earnings coming out next week. And to take any kind of major position for any long-term swing trades right before major earnings just doesn't make sense. So what I would suspect happens is we get some sort of a pullback, all right? Some sort of a pullback like this. You can see support through here, pull back down to here. Don't go too far, probably hold around this 393 area, and then maybe creep higher or after the earnings pop or move or break down. But I just don't see the market going too far ahead of those, so that's what I'd be looking for, something like that. It's a drop from where we're at right now in the post market of less than 1%. So that's all I'm trying to point out is just the small move. I just wouldn't anticipate anything too major. All right, let's move on. Gold, nothing too interesting. We are building that negative divergence on the hourly. You can see here, right there on the hourly PPO and the hourly RSI, we do have negative divergence. So it tells me that we're likely due for a pullback soon. Let me go down to over to the daily chart. Just been kind of marching higher. No negative divergence on the daily. So, it's still by the dip in my mind until we see a break of trend. Right now I've got this on the daily trend line, so maybe a pullback to the trend line. Until I see a break of the trend, it's still by the dip. And to counter the gold trade would be the dollar. You definitely want to keep an eye on that. And it has kind of the opposite. If I look at the daily chart, does have bullish divergence here on the RSI and the PPO. So we continue to kind of grind lower. It's really going nowhere. It's just grinding lower right here with daily divergence. If I go down to the hourly chart, there it is right there. So at the end of the day, the dollar does look like it wants to rally. We don't have any kind of a buy signal or any indication that that rally has started, but it definitely is set up for that. And if we're going to see a rally in the dollar, it's likely we're going to see the market moving lower. So these all play together, and we would definitely have to keep an eye on everything. For right now, it's just really nothing's going on. I mean, it's just ultimately we just have to kind of sit and wait. And that's the mode I'm mostly in. I mean, I'll put, I've got individual trades. We can still look at individual stocks and individual chart setups, but the indices are just kind of set up in a sit and wait mode. I mean, if anything on the SPY, it definitely looks like a short setup. It's a very good short setup. The only caveat is those big earnings. I just would like to clear those out before we, get more before we firm up any kind of strong opinion or analysis on the next direction. All right, individual trade ideas I've talked about. JP Morgan still looks like a good short. All right, here's your uptrend here. Negative divergence is right there, and we've just been back testing. Now, even though it's up today, still looks like a short to me. All right, we have a sell signal, back test. I'm expecting it to start to roll over and start to make new lower lows. All right, if we don't get that, then I'm just wrong, and we have to look to stop out. But as of right now, technically, nothing has changed in the outlook for this one. CAT, same thing for CAT. Now this one closed basically right at trendline resistance. We have earnings coming up. Again, I don't expect this to run away ahead of earnings, but on this one, you have a daily uptrend. You have daily negative divergence signaling a trend reversal is likely soon. Of course, not guaranteed. We have a breakdown and a sell signal. You know, I do like to see follow through on a sell signal, but it's not required. We have a breakdown, and then the last 3 days, we've got just a rally right into trendline resistance. So if we go to the hourly, you can see that, yeah, they recovered the trend line that I had marked out. They just barely recovered it. But, you know, that's typical to see the market makers kind of make it look like it gets recovered right before it, you know, gaps down back below trend line support and starts to roll over. So I still think this one looks good. You got to give it a little room, but technically it still looks pretty sound. So I'm still short this one. Looking to probably add on like a gap down or some sort of move that signals that it's about to, you know, flush out. All right, so that is that one. And I did actually add a little bit on this back test as well. Just kind of a little here, a little there, because we don't know. This could continue to back test. Maybe it wants to continue to trade sideways until earnings. Who knows? So I don't want to take my position all at once, but I'm not looking to add above the highs. If it wants to pop and make a new divergent high, that's fine. I probably, you know, because I'll have most of my position in this price action, I'll just let that, you know, make that divergent high and then wait to see if I'm, you know, right on the move down. So WMG, same kind of look. Bullish trend here. Negative divergence, broke trend with the gap down, so that's your sell signal. And then it's been rallying for the last week, but the most it could do is rally right into resistance. They haven't been able to recover it. You can see resistance, 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 rejected every time basically. And that's it. It's three tries. I think it will start to roll over soon. I like this for a move, continued move to the downside. First level support is going to be right there, 31, 33. Probably get a bounce, maybe a more muted bounce, and then ultimately break, I believe, and head down to minimum the 200-day simple moving average, about 29.20. And there's some support down here at 27.21. So from where we're at right now, because it is objective to short right here, a move down to the 200s, about a 18% drop. So I like that for the trade setup. And in general, it's an actionable trade because we have the sell signal and we're back testing. So it's objective to short at this back test. DHI. So this one had earnings report today. And so you can see they gapped it up back above the support line. Let's look at the hourly. All right, I'm giving this one a little bit of room. I will stop out if it wants to continue to move higher from where we're at now. But as of right now, on the hourly, negative divergence, okay, clean and clear negative divergence there. We had a sell signal, a breakdown. It rallied into resistance. Earnings came out, and so things can get choppy right after earnings. So earnings came out, they gapped it up, rallied it way up, but for the most part, they sold it after that initial earnings pop. So they sold it down, and they just weren't able to, break down below the support line. So that's what I'd be looking for. If it wants to continue to rally, if it wants to rally up over this 97, 90, 98, start getting the hourly closes up here, then maybe it's best to stop out of that and just take the loss. It's about a 5% move against the entry. If I go to the daily chart, and let's say you took the sell signal, which is right here, okay, and let's say you waited till the end of the day to take the sell signal, that means you've entered at about 92. I'm targeting this gap and this level right here. There's a gap to fill and a level, and the 200-day is right down there. 78.95 is really my target. So at the end of the day, if you took it, that's a potential profit of about 14.23% to that. And if you want to go down to the 200, maybe about a 17.5%, 18% target down there. Because I think you get that, you get that close, you're probably going to hit the 200-day at some point. and it's down 5%, so it's a 3-to-1. I think you can give it a little more room. Too much more upside, you're going to start to have a non-favorable risk-reward ratio. So I would be looking for them to break this thing back below support, maybe tomorrow. It could hold up maybe tomorrow and not rally too much, just kind of hang out where it's at, and then the next day break down. At the end of the day, I'm looking for it to break back below this trend line relatively soon. If it doesn't do that, we'll just have to stop out. Risk-reward ratio is still good, so I can give it a little room, but not too much more room. So that's kind of where I'm at on that one. And MDT, this one, it could continue to run. Here's the thing. I think the market, because the general market, especially the SPY, is sitting at that trend line, that key trend line resistance, it makes sense that you're going to get a pullback in the SPY. And if you get a pullback in the SPY, it's not guaranteed this is going to pull back, but it definitely just doesn't put the, it's just, you want to have your trades align with the market, and it just doesn't quite align with the market right now, with the market sitting at major resistance. This thing started to break out yesterday, but today started to pull back and really closing. I could say it closed within support basically right here, but I just don't like the alignment with the general market. And why take the chance? That's kind of the way I looked at it. So as we pulled back, I was starting to hit my break even. I just exited because even though this still looks like a bullish setup in the longer term, that doesn't guarantee I'm not going to, maybe do a back test, something like that. So it's much more objective in my mind to be long on a back test down here than it is, as we're coming into support like this, but with the general market at major resistance. Which, if I'm right, that's still a drop of another 2%. Why have any kind of give back or turn a trade that's not a loser into a loser? So yeah, that's where I went. I just went flat on MDT. Took the trade off. Didn't really make any money. It was just a break-even trade for me. All right, I'm gonna get this video out there, guys. I'll be back at it tomorrow. So best of luck. Check out my trading course if you're interested in learning this as a skill set. Feel free to join up in the private member group. I've went through a lot of these ideas already in the private member group. So yeah, best.